What's going on, everybody? It's May 23rd, 2023, day log episode number 7, volume 2. Today we're going to cover ES and the price action that unfolded and the trade that I took and a couple of things that were outlined throughout the session in the AM. So if you're not already, Telegram link below. I was annotating this morning how there was a potential quote unquote long setup, but there was a few reasons why I negated it and did not take it and told you all not to take it as well and wait for further evidence. And I think it was a really good point. Even though I took a trade today that won, I think that was the biggest winner, is knowing when not to take a setup, even though the criteria was there. And I'll point out the reasons for that. And you guys saw that in real time as well. So I think that was the most important part, at least for me today. And I hope you guys were able to learn in real time from that. Looking at the daily time frame on ES, we've dropped lower in here. So I think after lunch hour, I pointed out how there was a potential shift in narrative. And what that meant for me, at least, was I was looking at the daily time frame. I was looking at the dollar. I was looking at SMT as well with NASDAQ and YM. And to me, it just didn't seem like we were going to get higher prices. And what that basically means is you have to unmarry the bias that you originally held and get into alignment with the new one. And it's not an easy thing to do. It takes time and experience. And even myself at times, I can't predict it all the time. But there's going to be times where you're able to unmarry that bias and get into alignment. And it's a really good feeling. And I think today there's some really good reasonings behind it. I thought it was fairly easy to basically see why I would no longer look at a long setup. And I'll show that on lower time frames. But looking at the daily time frame here, just to kind of readjust, I don't particularly see higher prices in here anymore. We've dropped down into a discount for value gap. We have a bullish order block here, but we have a bullish order block resting above relative equal lows. And to me, that's not a good sign. That's not something that's high probability to me. Throughout all my years of studying these concepts with order blocks, if order blocks have relative equal highs or relative equal lows resting beneath them, I deem them lower probability because it could easily trade through it. It could easily attack the sell side liquidity that's resting beneath it. And to me, when I look at the daily time frame, it should have already displaced higher in here. It should have displaced off of this BISI in here and attacked the buy side. I mentioned yesterday, or even yesterday, how I wasn't particularly looking at this as the potential low of the week because I could have seen price taking out these buy side liquidity pools and then seeing this rapid displacement lower. I mentioned that yesterday, but we didn't get the buy side liquidity purge. But I did mention how in the morning session there was a bearish SMT on a higher time frame with NASDAQ making the higher high. So it was sort of an indication to me that I should be wary of a long setup. Looking at a lower time frame, 4-hour, we dropped down. We're now inside of a discount. We're returning into this fair value gap, filling in the remaining portions in here. And then we have these relative equal lows in here, resting basically at 41.12. And I think that's what we're going to attack. I can't see price displacing higher in here. There's nothing that would support a higher movement, at least for me. In here, we should have already displaced higher off of this. I don't think we should have returned back into here. So it's kind of the way I'm reading and analyzing price and basically confirming or not confirming a setup. Looking at a 1-hour time frame, there's a few things that happened today, so I'll do my best to cover it. I want to cover the AM session, but we've dropped down underneath the sell side here into the remaining portion of this fair value gap. Relative equal lows there at 41.19 and then 41.12 down here. So to me, that's going to be my draw on liquidity until proven wrong, because I can't find a reason to go higher right now. Even though there is relative equal highs, the fact that we ran out this high here on the daily time frame, we ran that out. There's bearish SMT on a daily time frame with YM failing to make that higher high, and then there's bearish SMT at these highs with NASDAQ making that higher high. So to me, that could be left at a later point in time. Let's drop down into a 5-minute time frame, and let me reel it back to the AM session. So I'm going to go ahead and plot the new week opening gaps in here. This green one is the current new week opening gap, and then this is the old new week opening gap. It's not important for right now, but we had a news driver event 15 minutes after the open today, and we had a medium impact news driver event at the silver bullet hour. So I elected all of you to basically wait for that hour, wait for price to prove itself to you. And we took out sell side liquidity, which is good when you're looking for a bullish bias. But I think a lot of people are getting caught up on this turtle soup idea where you don't need a shift in market structure. And it's a premature way of confirming a setup. And it creates a lot of fear and FOMO. To me, even though we took out sell side liquidity, we displaced higher, leaving a fair value gap inside of a discount, we didn't fully shift above this high. Yes, there's a wick above it, which is a shift. But to me, when you're trending like this, bearish all overnight, even the day before where we're trending lower, we're expecting bearish PD arrays, I need something to really confirm to me, because to me, it's just premature where you're FOMOing into that idea that, okay, this is turtle soup, displaced higher, I'm going to enter into here, we're going to long. I did annotate 4205, but I said I would rather elect to wait for this to prove itself to me, because we're in such a bearish climate. It's okay in a bullish climate where you take out sell side liquidity, we displace higher. You don't even need that shift above that high there in a bullish climate, because if you're displacing higher and we've been making higher highs, higher lows, you take out sell side liquidity, then that's valid. But when you're trending lower like this in a bearish market, you need to be very careful of looking for those bullish setups. So if you look at this entry, it was also before the silver bullet hour. So to me, I'm also matching time, and I elected to say, okay, I'll sit this entry out because I really need price to have an energetic movement. I need it to really confirm to me that it wants to seek higher prices. And I think a lot of the newer students don't understand that you have a really good skill set. You really do. If you would just wait in these conditions where you're unsure, and you may not have been unsure, but to me, this is a very unsure entry. It's a very high risk entry, especially in a bearish climate. You could have waited, which is what I was annotating. We could have waited for this displace higher, leaving a fair value gap, because more than likely it's going to leave a fair value gap in here. And then if it did, then it really proved itself to us that it wanted to go higher. Then we could have looked to enter into here, and that would have been a higher probability entry to target the buy side liquidity rather than entering down here, because a lot of you want that really good entry. But to me, looking for the really good entry is not high probability. I want the highest probability entry in terms of risk and where it's going to lead to. So I elected to sit this one out. You can see here, all we did was just chop around the entire AM session. And even in here, we displaced lower. The bodies were closing inside of it, but there's nothing in here indicating towards me that I should be looking to go long. I really needed good evidence to go long in here. So I think it was a really good learning lesson. If you did take it, it's okay. Don't beat yourself up. It's happened to me before, and it's the reason why I've learned to sit these type of entries out when you're in these bearish climates. Because to me, it's just premature. So I elected to wait for the PM session. I said to basically wait for the AM session to be done with, get off the charts, and then come back and see what PM session held. During the lunch hour, we displaced lower in here. And again, this is another kind of premature entry. This is where I would elect to say this was 50-50 to me, because on the higher time frame narrative, I was still looking for higher prices. So us taking out sell side liquidity, and if you looked at a higher time frame, we were dropping down into a discount, leaving relative equal highs in here. So at this point in time, this entry in here seemed a little premature to me. I wanted to get a little bit further evidence, and there was a 5-minute BISI in here. So to me, again, I'm not going to enter into this BISI. I'm not going to enter into the SIBI. I'm going to elect to wait for one of them to prove itself to me. If price displaced above the SIBI, and then we found another one in here to target the buy side liquidity there, and eventually there, that's perfectly fine. If we displaced lower off of this fair value gap, then to me, I would start looking to go short. And then I'll show you a couple other further evidence to support that idea. But you can see here, we had this rapid displacement lower. And this is immediately when I started looking for shorts, because we closed and we had this 5-minute fair value gap in here. And if you looked at a 15-minute chart, which let me see if I can pull this up. If you look at a 15-minute chart, we dug up into this Sibian here. We displaced lower. We've broke underneath the new week opening gap, leaving a 15-minute bearish order block, which just the tail end there is right inside of the premium of this fair value gap on the 5-minute. So if you took from dealing range high down to the dealing range low, I'm looking to enter inside of a premium. So anything above 50%, that's valid to go short, right? Coupled with the 15-minute bearish order block in here. Now, just as an entry pattern, this looks great, but let me show you the higher time frame so you understand if you are still stuck on this idea of going long, basically how to negate that. When you're looking at these higher time frames, or even this goes for lower time frames, look at the left side. There's no bullish PD raise in here that price could have respected and sent price higher. Just because we're inside of a discount doesn't mean price should go higher. There's nothing on a higher time frame that price is respecting. There's nothing, no open fair value gaps. We're disrespecting this bullish order block in here. If you looked at a 4-hour time frame, there's nothing in here for price to go higher. If you looked at even a 30-minute, there's nothing in here. So all of that is confirming to me that, okay, we're no longer respecting bullish PD raise. We're respecting bearish PD raise. We're displacing lower. Dollar wants to go higher. There's bearish SMT with NASDAQ. All of these things are confirming to me that price wants to go lower. And even in here, I was letting price prove itself to me, because even at this point, it was 50-50. So I let it prove itself to me. And once it proved itself to me, then this is simply model number 3. So it's a continuation pattern where I'm looking for a fair value gap inside of a premium coupled with other confluences, and I go short. And it could be that easy that, sometimes. So in here, I'll show you my entry. I entered into here. So once price got above 50%, I entered. But what was coupled with that? If I drop down to the 15-minute time frame, I'm coupling it with the tail end of this bearish order block in here, which is actually these last 2 up close candles. So to me, I'm entering off of the bearish order block. I'm entering off of the fair value gap, which is a 5-minute nested inside of a premium, looking to target sell side liquidity, coupled with higher dollar, coupled with bearish SMT. And I was targeting the sell side liquidity resting at 41.61. And then the new week opening gap, which I mentioned as well. So if we drop down into a 1-minute time frame in here, I still have a couple of annotations. If you see this high here, and you look at the time, we're moving into the 1 o'clock hour, my time. It'll be 2 o'clock New York local central time. To me, I was expecting this high to be ran out and to potentially run into this higher premium for value gap, which I was perfectly fine with, because I saw this bearish order block where we could potentially tag the open there, maybe a little bit into it. So I was comfortable with it. I was comfortable holding it, and you'll see my entry. If we entered into here, I was willing to enter in a little bit more position into here. I was fairly confident in this, and you'll sense that throughout time and experience where you're very confident in price. I was very, very certain in price dropping lower in here. And it wasn't overconfidence. It was just simply understanding where we were at. From here, this was just standard deviation. So I'm taking the previous structure swing and I'm projecting it out in time and seeing where we could lead to. So I was looking at 41.64. That's basically my overall target. And if you look in here, we took out this high. And if you look at a 1-minute time frame with NASDAQ failed to make the higher high. YM made the higher high. So it was bearish SMT in here. And then we saw this rapid displacement lower. Small fair value gap. IOFED'd it. Displaced lower again. Leaving another 1-minute fair value gap in here. And in here, this is how I'm reading order flow. It should not break above these. It should continuously keep respecting them if we truly are bearish, and keep displacing lower. Keep displacing lower. You can see here, I took out a partial underneath this low at 41.68. The only con for me is I wish I held out today for a little bit more. But with PM session trades, I'm a little bit more weary. I'm not typically trading them as much. But a little tip, I guess I could tell myself, is if AM session is held in consolidation, then PM session, if it is truly valid, we can expect a large expansion like this. So I'll show you guys my entries and the whole business. But even in the Telegram, after I took the partials and I got out of the position, I annotated 41.61, and then I annotated the new week opening gap at 41.53. So once we reach into that new week opening gap, what we're doing on higher time frames is we're reaching down into a deep discount, and we're running out sell stops, running into higher time frame BISIs. If you looked at a 15-minute time frame, I can actually go over this time frame here. We're dropping down into this open fair value gap coupled with the new week opening gap. So all of those are really good areas to take partials or fully close out. And at that point in time, it's when you can't keep looking for price to keep expanding, because it's already expanded a whole bunch. We're coming basically to the near end of the PM session. So I'm not looking for further expansion. And it's the reason why the PM session silver bullet, there really wasn't anything fruitful in there. If you looked at it, it's just basically chopped around. And that's because you already met certain objectives. Once you reach a certain draw in liquidity, once price is expanded enough for that day, it basically means that you need to sit on the sidelines. And if you miss the move, it is what it is. I think today was a little bit harder to predict for those that haven't been around as long, or just in general. Sometimes it's just hard to predict those narrative switches. And you guys saw that in real time. I annotated how there was some type of narrative switching, because to me, it should have already displaced higher. There was no evidence towards it that it wanted to run higher. And dollar continuously kept grinding higher, which I'll pop over to. And that was kind of a big telltale to me, was dollar is just not wanting to go lower. And it's where you just have to unmarry that bias. It doesn't mean I'm wrong. I didn't take a loss. I didn't do anything that, pushed a lower dollar. So it's fine. You just have to understand when to unmarry that certain bias and when things are invalid and move on. And to me, dollar in here is just continuously grinding higher. We're still residing inside of this fair value gap and this bearish order block. We have one above here. I would elect to believe that dollar wants to reach that, because when I look at EU and GU, those lows that I mentioned yesterday, I don't think they're going to be left. I think those are going to be tagged. And if those want to go lower, then dollar would want to continue higher. So what that means for ES is that it's going to continue lower. And that's how I'm basically using intermarket relationships. If you look at the 1 hour time frame on dollar, took out the high here, returned into a fair value gap. I said prior to the events today, I wanted to see a lower dollar, which we did get off rip, where we took out buy side, returning into that fair value gap. We saw a displacement lower, leaving a fair value gap in here, returned into it, displaced lower. At this point in time, I wanted to see those lows ran out in here, but dollar just grinded higher. And at that point, I was like, well, I don't think ES wants to go higher anymore, because if dollar wants to continuously pump higher, then I kind of have to put the long bias on ES to the side and see if I can get some evidence for downside, which dollar didn't even go higher at that point in time where ES dropped, which is fine. It went sideways. Dollar can be held in consolidation while ES and other future contracts go higher or lower. So if you're ever wondering that, let me show you the entries today. Go down to a 1 minute time frame in here. So I entered at that high there, right side of a premium. I told you guys I waited for this out, and I wasn't worried at all. I was okay with price returning into that, because there was a bunch of confluences for me, especially with time as well, where I was allowing for that. And I didn't know that price was going to do this. I was willing to just get into this entry here. It was inside of my rules, and my stop loss was above here. So if we even moved anywhere above the Sibian here, then I was going to close it out. You can see here I took a partial right before that low was ran out, just because I was up basically 9 handles. I was willing to take out half. Then we moved underneath it. I took another partial. So only thing for me, if I could say, is just to hold out a little bit longer. But with PM sessions, a little bit more weary. I don't trade them as often, so I'm not as comfortable with them. And again, this is a huge narrative switch. So to me, if I was overall bearish leading from the week, then maybe I could have held it out for a little bit longer. So overall, still a great trade. I don't want to be too self-critical of myself. Let me touch on this business as well. Again, full transparency. No trades were taken until today. We're resting at 1%. It's nothing too big. I'm really not in a rush to do anything. I'm taking this account very slow. We're in very tough conditions. So it's best to just be very calm, very patient. Let me go down to here. So there's actually 3 partials. I didn't have the other one on, but basically they're both taking at the same time. So that's the business in here. And you can see last week, no other trades were taken yesterday or even in the AM session today. So full transparency. And I think that's going to be it for today. Until tomorrow, good luck and good trading, everybody. Be safe.